Hello everybody, this is Rajesh Babu. Today I'm going to discuss about trading is viewed in different aspect compared to investing, because the trading is entirely different set of objectives compared to investing objectives, because both are different set of working styles, especially when it comes into investment concern in stock market. Of course, the both things are needed for the initial capital investment to require to trading and investing over period of time. But the trading is having a different set of features, and the investing in stock market is having different set of the features, because trading is involvement of buying and selling the transactions stocks during the day. But investment is not like that. The investment made over a period of time, like short term period, medium term and long term investment concern. The most important thing is most of the investors look for the investing in for the short term and long term concern, but the few investors do trading for the short term gain in a particular given trading day. That is the difference between trading and investing, and we are going to discuss more about trading and investing concerns, and we are going to make a differentiation among them. Well, buying a stock on a blue chip companies most of the time involved less risk, because in blue chip companies, which is investing concern, is having a less risk associated with compared to other non blue chip companies, because the blue chip companies is having a heavy investment and having a most the capital investment done in blue chip companies, and most of the trusted investors are investing money in the specific stock, so that is risk wise less. And of course the certain risk is also associated. For every investment and trading is associated with a certain risk and return in the market, and trading is having a different set of the risk in a specific day. The risk is associated with specific selected stock, the investment made in during the day, and it is all depending upon how the investor is making a proper entry and exit strategy while doing the trading. But in a investment concern, especially if it is more than one day, and it is a risk is associated, and sometimes the investors will get profit, sometimes the investors may not get relevant profits. It's based upon the risk return scenario of the selected stock, and it is also beta is proportionate to the specific stock to measure the risk and return. And the common element for doing the investing and over a period of time is a key factor for trading in a specific day and investing for several time intervals. And let's we discuss further. In investing and trading, buying, selling and transactions occurs in a day, especially the buying and selling transactions in a day. The buying security and selling securities will be closed within the day. The trader will book the profit or loss in a day, so there is no carry forward of the transactions to the next day. And before that, there is a scenario is there: buy today and sell tomorrow. But nowadays the system rules and regulations have been changed and place takes a place. The investors should trade, and between during the day time and closing the market time before closing bell, the trader has to close the position and to exit from the trade. So the entry and exit trade between the those days should be done for the trading. And another one is investing in short term, especially when it comes into investment. The very primary thing is the investment done, the most of the investors in short period of time, that is ranges less than 1 year, that we can name it as a short term trading. Most of the swing trading is related to the short-term investment. And when it comes into medium-term investing, the medium-term investing is ranges between 1 year to 5 years. That is a general time criteria chosen by the portfolio managers, fund managers, and other investors for the medium-term investment concern. And when it comes into long-term investing, it is more than 5 years and to number of years. The investors are interested to for long-term investment returns for investing in long time period. And the risk associated, if the investor takes highest risk, then there is a proportionate to have the result either high return or high loss. That is a proportionate will occur when you are taking a high risk, especially when you are investing in equities, when you are investing in venture capital. The risk scenario is high, so that consequently there will be a high return or high loss. And when you take a moderate risk, the moderate risk when it comes into medium return or medium loss, because the average returns can be sustained while you take for the moderate risk. At the same time, if the returns having a reverse position, maybe the investor will have to book medium losses, average losses over a period of time. And when it comes into lowest risk when it comes into post office savings bank deposits is the best example for the lowest risk investment avenues, where the consequently the investor will get low returns and low loss over a period of time. And this is the consequences when will happen in a period of time, especially when it comes into investment concept. So in the conclusion, we have to view the trading is entirely different from investing, but certainly these two element things are needed: the initial capital for for investment concern. But when it comes into return and closing the position, trading should be viewed indifferently, and investing should be viewed indifferently. Those two elements is having a risk and return association, and time associations are different compared to trading and investing. And thank you for spending your valuable time, and I hope that you will having some valuable points in the session. Thank you so much.